Welcome back. Are we in a recession? And Dave Portnoy says what many are thinking. He said, if Bitcoin is supposed to be independent of the dollar, why does it trade just like the stock market? Very good questions and very good conversations that we're going to be having in today's video. We are going to be talking about the economy. We're going to be talking about shorting the markets, longing the markets. We're going to be talking about kind of hedging your positions, whether it's in crypto or the stock market. And we're also going to be hearing from some of the banking and hedge fund ecosystem participants who believe that we are already in a recession. And so we're going to start right here because a lot of people have been asking this question, right? Why is Bitcoin going down? Why is crypto going down in a macro environment, right? A zoomed out ecosystem where everything is falling, right? There's a lot of uncertainty. Now, granted, there's a lot of volatility in the markets as well, and the volatility is something that we need to think about. But when we zoom out, right, this is the S&P 500, right, one of the stock indices, and you can see a massive drawdown. This is the one-year chart. We're down 181 points on the year, but we're basically where we were last year at this time. In April of 2024, we were at the $5,000 level or 5,000 level in the S&P 500, and we're at the 5,000 level now. All the gains from the last year wiped out. And in Bitcoin, obviously, it hasn't been that big of a drop, right? Granted, we've come down 30% from $110,000 top just a few months ago. You guys can see right here on the chart, all the way down to $77,000. So a big drop, 35%. But why is this happening, right? In an environment of uncertainty, we should be seeing cryptos going higher as the store of value. But we're going to be explaining all of that in today's video. So make sure you guys are subscribed to the channel. Give the video a free thumbs up. We upload almost every single day to bring you the latest happening in the financial world. And let's get right into it. And so as I was explaining, if you look at this chart, this is very similar to what happened in the beginning of 2020. In the beginning of 2020, we saw a major drop down in the markets, right? And a lot of people would say this was capitulation. But we were also seeing the same thing, not just happening in the stock markets, but also happening in crypto, where crypto was cratering. In 2020, it went down from like $10,000 all the way down to 1,000. And people thought it was going to go into the hundreds. And I remember people were talking, well, what if it goes to $100? I'm going to dump the bank account in. I was like, okay, we're at $5,000. We're not at $100 yet. Let's see if we get there. And we did not. The market reversed, right? That was capitulation. But why was Bitcoin following stock market? Well, one of the things you have to keep in mind is that crypto is a store of wealth. Okay, it's also considered a hedge against inflation. But the thing is, when the rest of the markets are dropping substantially, right, 30, 40, 50%, some people have all of their money in the markets, right? Big corporations, a lot of the money in the markets. A lot of people don't hold cash. A lot of wealthy investors, companies, hedge funds, they don't hold cash. And so when the market's dropping, sometimes they sell or they have stop losses or they get liquidated at certain levels, which bring their portfolio significantly down, but that selling can also exacerbate more selling. And also sometimes what they'll do is they'll take their money out of these risk assets and put it into cash on the sidelines to pay their bills or rebuy into the stock market, because crypto is like the last pot that people typically put their money in, right? They're going to put their money in bonds, treasury yields, CDs, the stock market, just very safe investments. And then really crypto is, although it's becoming a more safe and sound investment, it's still viewed as very high risk. And so this is gold as well, right? You see people going to the pawn stores during these drawdowns, bringing their gold, getting cash to pay their bills, right? And that's the idea of holding these risk-adjusted assets, so that when there is a lot of risk in the market, right, you can make those decisions what you want to do. But Dave Portnoy's question brings us into the other part of kind of the markets, the uncertainty. And this is a bigger deal than anything else, right? The uncertainty in the markets. So let's understand a little bit what Dave said. Now, Dave Portnoy, Barstool Sports, also I'd say the number one pizza expert in the world. Anyway, he said, I have a dumb Bitcoin and crypto question. If the point of Bitcoin is to be independent of the US dollar and non regulated, why does it basically trade exactly like the US stock market nowadays? Market up, Bitcoin up. Market down, Bitcoin down. And again, this is a great question. But the thing is, yes, Bitcoin is a hedge, right? I remind you, back in 2021, the inflation was occurring, right? We were seeing prices go up, but people didn't necessarily feel it or care about it because they had all this money and they were, we were out, no more social distancing, no more 6 feet, no more all the other stuff from the pandemic, right? So people were spending money. And while they were spending, that's demand increasing, but the supply was the same or less because during the pandemic, right, there was less supply. And so the demand was going up, the supply was staying the same or was lower. What does that mean? Higher prices. So prices started to go higher and higher and higher and higher. But people kept spending because they had the money, right? It didn't really matter. Everything felt good. That was the inflationary period, 2021. We got the actual numbers in 2022. The year over year showed, 9% inflation, but that wasn't happening in 2022, really. It was happening in 2021. 2022 is when we were actually looking at the results because those were lagging indicators, right? A lot of stats we get are lagging indicators. They don't tell you what's going to be happening. It tells you what's happening right now. So during these times of uncertainty, this is typically what we see. The market does not like uncertainty, right? Because if the market's uncertain about the stock market and the market is uncertain about global markets and the market is uncertain about the dollar and trade and tariffs and all this stuff, people are like, you know what? F it. Pull all my money out of the markets. And not just crypto, not just stocks, crypto also. Go look at the real estate market. A lot of homes on the market, a lot of high price homes on the market, right? A lot of wealthy people, they're just like, screw it, get me out of this market because we could drop another 50%, we could drop another 80%. And so this is a very good question to ask, but we have to think about this time period where the market's going down, right? What is next? What is after that? In my view, we are still in the bull market. In my view, we have not entered bear market. We may have. This is my opinion that we have not yet. I do think that we're close to the final pop off because these kind of questions to me indicate, this is Dave Portnoy asking the question. A lot of other people are probably asking the same question, and so people are not really entering the markets now, even though it's buy low, sell high. We're down 40%. The stock market dropped all its gains from the past 1 year. And people are nervous about entering the market. I mean, buy low, sell high, don't buy high, sell low, right? And so, yeah, sometimes with investing, it's tough. I mean, look at MicroStrategy. Their basically dollar cost average is $67,000 and Bitcoin is at $77,000. They're $10,000 away from their dollar cost average. And we're talking about $40 billion in debt that they took out to actually buy that Bitcoin that they're basically almost even on. And so that's from a much higher level, right? But they keep buying the dips. They keep buying the top of the market. They don't care. I always talk about buying the dips, buying the dips, buying the dips. A lot of people, they may have money in their accounts and they're like, no, I'm not going to buy because I think we're going to go much lower. And it's like, okay, we may go much lower, but the upside potential after these major moves down, especially in very short periods of time, is higher, right? We may not see what's called the V-shaped recovery, which is what we saw back in 2020, right? We came down and then went straight back up like the letter V. But like this drop right here in 2024, this was a V shape, right? Straight down and then straight back up. So the recovery could occur. And there's a lot of people on Wall Street. There's a lot of big money that are counting on this and they're betting on it. And just to give you a little bit of insight into that, BlackRock's Larry Fink says that the economy is weakening and CEOs see a recession already. So BlackRock's CEO Larry Fink warned that most CEOs would say the economy is currently in a recession. Currently. And so remember, the data that we get about whether we are or are not in a recession, it's lagging, meaning you get the data afterwards. right? So they'll tell us in 6 months, oh, we were in a recession at the beginning of the year. It's like, yeah, no, we're in a recession. The markets are down. Everybody's feeling poor. Companies are laying people off, right? We know that. But the data we get later, those are lagging indicators. What BlackRock's Larry Fink is telling us is a leading indicator. What we are seeing in the markets is a leading indicator. What we're seeing from companies announcing thousands and thousands of people getting laid off, these are leading indicators. Leading indicators tell me where the market is going, not where the market is, where the market is going. Now, if we look at where the market is, down, stock market, down, where the market's going, up. It's going up, right? Maybe not today, maybe not tomorrow, maybe not next week, maybe not even this year, but it's going back up. And so I want to prepare for that. I want to prepare for the upside. Because in my view, especially from a crypto perspective, we are in the most bullish time that I've ever experienced, even though most people are feeling bearish. Think about the regulatory environment, the presidential administration, the president's family, World Liberty Finance, all the regulatory agencies giving clarity on crypto, money being pumped into crypto and all of this. So what BlackRock's CEO is telling you right here, he's literally telling you, executives are telling us we're in a recession right now. And so these companies are preparing for what's next, right? So they're laying people off, right? They're clearing out dead weight or dead departments that are not helping the companies. They're saving money that way. And then what are they going to do? They're preparing so that when the economy turns around, we're no longer in a recession or we're on our way out of the recession. They're prepared to start investing. And by the way, it's not just BlackRock's Larry Fink saying this. Jamie Dimon says a recession is likely outcome from Trump's tariff turmoil. And by the way, Jamie Dimon has been saying we have an economic storm coming for 2 years now, right? So JP Morgan has been leading the indicator on what is happening now for basically 2 years. He said that he sees the US is likely headed to a recession as the tariffs roil the markets. He said, I think probably a recession is a likely outcome because markets, I mean, when you see a 2,000 point decline in the Dow Jones Industrial Average, it sort of feeds on itself, doesn't it? It makes you feel like you're losing money in your 401k, you're losing money in your pension. You've got to cut back. So he's saying he says, I think the likely outcome is a recession to all of this that's going on, and then explains what is going on and says this is what creates recession. So if the environment is creating a recession, that means we're already in the recession from a market perspective, because the market prices these things in. And so that's what I think is going on here. I think the market is repricing itself. Drinking coffee today, by the way, for the video. So you may hear some pauses. It's me just rehydrating and getting a little bit more energy. But anyway, here's the deal, guys. Yeah, people are losing their money in their 401k. I never really thought about it. I saw, I think it was a TikTok or something like that the other day of people who are either close to retirement or in retirement, and they've seen their portfolio drop by 40, 50%. I mean, I want you to think about that. We're not talking about rich people. We're not talking about multimillionaires. I mean, most people, I don't even think that they have more than $2 million in their retirement accounts, right? I watch a lot of videos of people who, like these compilation videos where they talk about, what's going on in the economy and all this. And I've seen a lot of people who are like, my parents passed, we looked at their accounts, and I couldn't believe how little money they had, right? People think their parents are retiring with $10 million in retirement, and it's just not happening. And especially now, right? If you're relying on your portfolio, on your 401k or whatever retirement fund that you have, and you're relying on it, and your portfolio drops by 50%. Makes you question, like, what are you going to do? Are you going to be able to afford things? You're going to have to cut back. How long are you going to be able to live off of this money for? And so these are all indicators that we have to keep an eye on. And this is why I think that Bitcoin is going down. It's just kind of following the uncertainty, following the fear in the market. Because again, what do people always say? Don't invest what you can't afford to lose, especially in crypto. And crypto is very volatile because the stocks, again, you could sell your stock tomorrow and it may not move the price. But if people start selling their crypto, it's going to move the price because there's not as much volume in the crypto markets as there is in the stock markets, right? So the leading indicators is that we are already in a recession. Another leading indicator that we're heading towards more upside, in my view, and then downside, because you guys think this is downside right now. I think it can get way worse in the crypto markets because remember, Bitcoin's only down 30%, right? We haven't really, it can go down to $20,000. People forget about this. But if we look at, where was I? Here we go. Tuttle, which is an ETF issuer, just filed for a first of its kind ETF, a double short MicroStrategy ETF. So remember, MicroStrategy is highly levered in debt with Bitcoin. There, if MicroStrategy collapses or doesn't do well or there's fear, this is going to translate to Bitcoin, right? If there's fear in MicroStrategy that they're going to sell their Bitcoin, the Bitcoin price is going down, the stock price of everything's, it is crazy what can happen with the MicroStrategy stock at this point. It really is. But now this ETF is going to aim to profit by both shorting 2x long ETF and a 2x short ETF, betting on their decay from daily resets. Whoa. So let's break down what this is, okay? MSTU is a 2x long and MSTZ is a 2x short ETF. Effectively what that means is, let's say MicroStrategy goes up 10% on the day. Technically, the 2x long would go up double that. So if MSTR went up 10%, the MSTU would go up about 20%. But these are not perpetual ETFs. They reset every day in terms of their trading and abilities, right? So if we're like, for instance, up 10% today and the long goes up 20%, but then over the next week, we're down and down and down and down. And then next week we go up 10%. MSTU is going to go up 20%, but it's going to be probably a much lower valuation because of all the sideways and downward trading from the previous week. Because remember, it's daily resetting what they're trading. This is the easiest way for me to kind of explain it the way that I understand it. And basically the 2x short is basically the same thing. So if the MicroStrategy goes down 10%, 2x short would go up 20%. And vice versa if it goes up, whatever. So what this new ETF is going to be doing, double short, is they're going to both short the long position and short the short position. So effectively, they're going to win regardless if MicroStrategy goes up or down. And on the decay, what is decay? Time decay in the markets is a measure of the rate of decline in the value of options contracts due to the passage of time. Basically, if you buy an option, right now I'm recording this in April. If I buy an option for August, right now it may be a very high valued option. But if we get closer to that date and the price is still disconnected from what my option is, the price of my option continues to drop as we get closer to that date, unless I'm in the money, which a lot of options expire out of the money, right? And so time decay accelerates as an option's time to expiration draws closer, since there's less time to realize a profit from the trade. So when they short and the price continues to go lower, they make money. And if the price continues to go higher, well, if they're 2x long, they're still making money, right? So it's very interesting to see a lot of these ETFs coming out. But again, these are, in my view, levered bets. These are one step away or two steps away from Bitcoin or two steps away from MicroStrategy, right? Because it's MicroStrategy, then the ETFs, and then this double short ETF. So it's actually 4 steps away from Bitcoin. Bitcoin, then MicroStrategy, then the MicroStrategy ETFs, and then this double short ETF. It's 4 steps away. But this 4 steps away can still make an impact on the underlying asset. But this is a way to kind of play the market if you're not sure where it's going. They're basically playing both ends. It's It'll be very interesting to see how these play out. Now, keep in mind, these sound very positive from a valuation perspective, like, oh yeah, this is definitely going to make money. But some of these ETFs do not. They make a lot of money at the beginning and then they don't, right? So we have to kind of keep an eye on where the market is going, especially if the price is continuing to go higher, and the 2x short at some point will probably stop dropping in price, because it effectively, I don't think that it can go to zero. I mean, maybe it can, but I don't think that they would let it go to zero because it's an ETF and they're there watching the market and trading the market. Anyway, hopefully that's not too complex. But even if we're not in a recession, or even if we are in a recession, it doesn't matter. What's happening in the markets also has to do with what the Federal Reserve is doing with the interest rates. Now, this person, Parker Lewis, who is the head of business development at Zapright, working on Bitcoin payments, he talks about this and says, as interest rates rise and stay high, faith in the reliable Federal Reserve put safety net has vanished, leaving markets to reckon. Basically, interest rates are high. Everybody believed that the Federal Reserve was going to jump in at this point and lower rates, and they have not. That's a problem. He says, if the federal government debt is not expanding, it starts to collapse on itself. This system is so imbalanced and broken. Let's listen into what he says. And by the way, if you're up to this point in the video, don't forget to give the video a free thumbs up and also hit that subscribe button. That way you never miss a new video right here on the Cryptoviser podcast. Let's listen in to Parker Lewis.
If the federal government debt were not expanding, like that's what's creating this overall credit expansion, which is part of what the Fed needs to, it needs the total credit system to be growing. If it's not growing, it starts to collapse on itself. And so if there's this kind of catch-22 where if the amount of debt that the federal government, not the Fed, was creating suddenly like started to contract, well, that money's going to somebody. You know, it's getting out there into the economy. So that itself, you know, I don't think that they're going to be able to do it, but like it's damned if you do, damned if you don't. Like the system is so imbalanced and broken that if you know, what's most likely to happen, or what's a certainty happen, is they're going to print money. But in this kind of scenario, the Fed's going to have to step in to buy the government bonds.
They're going to have to monetize the debt
to control the interest rates. And that when you think about, well, should I hold?
I'm going to pause right here for a second, because many would argue that the Federal Reserve is already doing this, right? We've already covered the Federal Reserve enters the markets, right? They have a trading desk. We know the Treasury works lockstep with the Federal Reserve. We know somebody's buying the debt. I mean, if you look at the debt market, we don't really go too in depth in this channel in the debt market. But if you do, I do a lot of research on this on the like off the channel. But if you look at the debt and the debt markets, somebody's buying the debt. And it's not you, and it's not me, and I don't even think it's BlackRock, to be honest, right? Yes, there is some hedge fund buying of treasuries and this and that, but it's not to the level that they needed to keep the level suppressed even to where we are today, right? Where the Federal Reserve interest rate is about 5%, mortgage rates 8%. I mean, if we were at true value in the markets, I believe the interest rates would be much, much higher, like double digits. I was talking to an investor I know, much older than I am, and this person has been around for a long time through a lot of the market shifts and cycles. And this person tells me that they were paying, I think, their mortgage back in the 70s. I think it was 70s, maybe 80s. But anyway, back in the day, way before now, paying like 15, 20% interest rates on the mortgage. And I was like, whoa, like, was it difficult? And they said, no, it wasn't as difficult. Like, granted, people wanted those interest rates to come down. But you have to remember the cost of living, 30, 40, 50 years ago was way different. The value of money was way different. I mean, you can have one person in a household working, and that would be enough to raise a family and own a home and have a car. Right now, You have to have two people working. They can barely afford their home. Maybe you can't even afford a car. Can't afford to have a family. Like all these kind of issues that we're seeing now. And a lot of this has to do with the fact that the dollar has been devalued while everything around us continues to go higher in value. I mean, if you think about wages, they doubled the minimum wage in most places to $15 an hour, and it's still not enough. $15 an hour at full time is $30,000 a year. $30,000 a year. I mean, if you go to LA, you're paying $2,500, and that's low for rent. 12 months a year, that's $30,000. So if you're working $15 an hour job in LA, you only have enough for rent, and that's it. No food, no transportation, no car, no oil changes, nothing. It's not sustainable, right? And so I'm not talking about whether you agree with minimum wage changing or not. Like, that's not what we're talking about. We're really talking about where the economy is. And so the debt situation, we have to, as a nation, the US has to keep printing more and more and more and more. I mean, if we go to the US debt clock, the US debt clock is at almost $37 trillion. And so they're constantly creating more debt. Who is buying the debt? The Federal Reserve is the lender and buyer of last resort. It's not just the lender of last resort. They're the lender and then the buyer of last resort. They issue debt on one end and buy the debt on the other end. That's how they keep the market suppressed. And so if we're going lower rates, they're going to be buying a lot more debt, right? So a lot of people would say they're already buying the debt. Let's continue listening to what Parker says.
They're gonna have to monetize the debt
to control the interest rates. And that when you think about, well, should I hold a government piece of paper for 10 years that not only has interest rate risk, but has market risk, right? Because if you look at the actual mark-to-market value of the 10-year or the 30-year over the last 3 or 4 years, there's massive mark-to-market losses. Everyone has always, in my lifetime, which now that I'm getting a little bit older, it's starting to be multiple cycles, but there was always the idea of the Fed put. And then Jerome Powell and the Fed tried to, really, quote, get out of it. And they raised interest rates fast and they left them high for an extended period of time. And the idea that the Fed put is there is no longer assumed as religion.
And so that's a very interesting take on what is going on in the markets. And remember, the debt markets determine where the stock markets and therefore the crypto markets are going. But don't get it twisted, guys. By the way, I pulled up this article. It says Bitcoin's macro decoupling discussion is yet premature. The 10-year treasury yield signals a murky outlook, according to analysts. Very in line with kind of what Parker Lewis was saying there in that video. It says, as investors had been cautiously optimistic about the potential bottoming out of the recent sell-off, this tariff hike has caught many off guard, forcing reevaluation of their investment strategies and risk appetite. Now, again, as an investor in crypto, which is an international global payment and store of wealth system, it doesn't really matter what happens in the short term here. It doesn't matter what happens with the rates. It doesn't matter what happens with the tariffs. It doesn't matter that corporations are feeling uncertain. It's going to get worked out eventually, right? What that eventually is, I don't know. I think it's going to happen quicker than most people are anticipating. But don't let the short-term situation remove you from why you invested in the first place, right? What is Bitcoin? It's a hedge against the system. It's a hedge against the Federal Reserve printing and buying the debt and suppressing the rates in the market and not leaving a free market. That's what it's a hedge against. And so Bitcoin is not affected by tariffs. Bitcoin is not affected by geoeconomic uncertainty. It just isn't. So the market moves that we're seeing from a price perspective is just basic sentiment and fear and greed in the overall markets. I mean, if we look at the volume, I would imagine volume over the last one. I think, can we pull up volume here? We used to be able to pull up volume on here. I don't know why we can't, but Oh, it shows you down here. What you can see, if we pull up the 1-year chart, you can see that basically we had a lot of volume towards the end of 2024 down here at the bottom of the chart. These little bars are the volume. And it has come down fairly substantially since. Even if we pull up the 1 month, let's see, it's kind of like not really that much activity in the markets. And so the volume isn't there because people are just sitting on the sidelines waiting. What are they waiting for? I don't know. The Federal Reserve to say something, the news channels to say something, maybe a few days of uptrending market. I don't know what the market is waiting for, but people have their money on the sidelines and they're not putting their money in the markets. When they do, we're going to start to see the volume increase. And when the volume increases, we're going to start to see the prices moving higher. And that is going to create a frenzy, right? More people get involved, more volume, more higher prices, more long positions, more shorting. Then you have another short squeeze and the prices go even higher. And then more people come in, more volume, higher prices. And it does that until it doesn't, right? But right now we're in the opposite. We're going to the downside. But eventually that's going to reverse. We've seen it happening over and over. And with this bullish environment, the bullish administration, I think it's going to happen a lot faster than most people are anticipating. And guys, the big money is preparing. They are preparing for it. BlackRock already told us we're in a recession, right? CEO Larry Fink said the CEOs believe we're already in a recession. Jamie Dimon, the head of the largest bank in maybe the world, said that we're likely going to have a recession, meaning we're in a recession right now based on all the factors. So you don't think that they're positioning, you don't think they're hedging that position, you don't think that they're going to buy the market or already buying the market? Because most people are. They're sitting waiting for CNBC or Fox Business or Bloomberg to tell them you got to buy now. We're in a recession. Now's the bottom of the market. That's not what's going to happen. They're going to tell you we're not in a recession until they tell you that we were in a recession, but that was 6 months before. We just got the data though. Galaxy Digital gets the SEC nod for a US listing and eyes NASDAQ debut in May. As you guys know, Galaxy Digital is Mike Novogratz's company. I wonder if he still has the Terra Luna tattoo or if he got it covered. Anyway, so they're going to be going public on the NASDAQ as GLXY. They're moving from the Cayman Islands to Delaware. And this is, just another indicator. The big money is coming to the U.S. They are really liking this regulatory environment and the clarity, as we've talked about for years. This is what the crypto industry needed: clarity. And then the companies would be coming to the United States instead of exiting the United States. I think this is a very positive thing, and they're doing this now. People aren't bullish about it right this second because they're like, oh, it's just Galaxy Digital. But it's not just Galaxy Digital, right? Think about all the other companies. Coinbase just said they're going to hire 1,000 people. What do you think? They're just hiring 1,000 people? No, they're expanding their business. Gemini may be going public. Ripple may be going public. Circle going public, right? They are all preparing for the money to flow. And when that money flows, it is going to flow, and people are going to even forget that we were in this downturn at the beginning of 2025. But be cautious, guys. Be cautious, because as I've explained, there is over leverage in this market. There's a lot of new derivative products that can offset how high we go or how low we go in the markets. And so as much as we are in potentially a bear market or corrective territory right now, and prices in the stock market are very suppressed and in crypto are very suppressed, we can go much, much higher overnight, over the course of a week, a day, a month, I don't know. But make sure that you have numbers in your head and an exit strategy to take profits out of the market. Because as much as we're down now, we're going to go much, much higher. And what's going to happen after that? And so you always have to be ahead of the market. When people are extremely bullish and they're saying dump the whole bank account into crypto, sell. When people are bearish and saying, "Oh my God, why is Bitcoin not following the independent? Why is it following the stock market?" That's the buy signal. It's the buy signal, because if Dave Portnoy, who has all the resources to find the answer to this question out, if he's asking this question, you don't think the average everyday person is asking this question? And they're probably asking the same question and saying, yeah, I'm not buying crypto right now. This is ridiculous. Crypto should be going higher, not lower. Well, again, we go back into the most basic investment thesis, which is buy low, sell high, don't buy high, sell low, which is what we're hearing a lot in this cycle. A lot. And we're towards the end of the cycle. We're towards the end of the bull cycle. But I do think that we're going to see a lot more volatility to the upside before then. Let me know what you guys think down below. Don't forget to give the video a thumbs up, hit that subscribe button, check out my other videos on the channel, and I'll see you when I see you. Crypto on.